Welcome back. I'm Majid and this is Financial Crime Awareness Hub. Today, the topic that we are going to cover is the most consequential topic in financial crime compliance. It's sanctions evasions, not the sanctions itself. That's a complete topic in itself when we're going to discuss the CGSS things. So today, actually, what we're going to cover is about how sanctioned entities, individuals, and rogue states try to get around these sanctions related stuff. So the techniques they use, the red flags they have behind, and what actually CAMS exams expects you to do when you see those signals or red flags. So this video actually covers how, as I said, sanctioned entities, rogue states, or any criminal networks get around those sanctions. So these techniques actually what they use, and their red flags, how they leave behind, how you can trace it, what exactly CAMS exam expects you to do when you see those signals. So let's get into this in more details now. So let's see how does actually sanctions entities move money. So let me start with this scenario before I define anything else. So let's see, for example, if there is a trading company in UAE places, and in order for dual use of electronics with a supplier in Europe. So dual actually use products means their components have legitimate civilian applications or usage, but they have some kind of a connections with military applications. So the buyer actually look legitimate, the paperwork is clean, the payment routes through a Turkish intermediary, the goods are shipped 6 months later, those components appear, let's say, in Iranian military equipment, for example. So now ask yourself 3 questions. Who was the actually real end buyer? And at what point did the sanctions breach occur? And which financial institutions was used, and did it know actually what is happening? These are the things. Think of it. So this is actually sanctions evasion. That's what we call sanctions evasion. So the sanctioned parties never appeared in the transactions. A legitimate looking intermediary created the paper trail, and financial institutions processed the payment without fully understanding what it was financing. And this is not a hypothetical, this is documented pattern across dozens of enforcement cases involving Iran, Russia, North Korea, Cuba, and other sanctions jurisdictions. Let's now dive into further in real cases what happens. So the Danske Bank scandal is the one of the most documented example I could remember easily. Actually, what happens, how sanctions fund move through the Western financial system using the correspondent bank's infrastructure. So between roughly I would say between 2000 and 2015, approximately it's like something 200 billion in suspicious transactions flowed through single branch of Danske Bank in Estonia. So a significant actually portion involved funds from or connected to sanctions jurisdictions, routed through networks of shell companies with nominee directors in offshore locations. So the mechanism actually that made it work, actually, Danske Bank in Estonia had a correspondent banking relationship with major Western institution. That's absolutely normal. Every single bank, because they do not have presence every single country, so they have to have those correspondent relationships. So that actually what happens, that gave the shell company network access to USD clearing, which is exactly what a sanctions entity need to move money internationally. So in a way, no single institution saw the complete picture. Danske Bank in Estonia saw the payments from shell companies. The correspondent banks actually saw the payments from Danske Bank Estonia, and each institution saw only one link in the chain, and that is precisely how sophisticated sanctions evasion is designed to work for. Now let's go into the details, like what are the sanctions and how it actually works. So now let's look at what are sanctions. So before we go into evasion techniques, a quick recap on what sanctions actually are, because CAMS exam test both. So sanctions are restrictions imposed by governments or international bodies on specific individual entities, sectors, such as for example energy sector, for example, or any sector that is risky, for example drugs, for example, okay, or entire countries, okay. So they are actually tool for foreign policies and national security, and they create binding legal obligations on financial institutions. The four main sanctions authorities you need to know are, first one is the UN, okay, the UN Security Council. It has a global reach. All 193 member states must comply with it. It targeted primarily at states and non-state actors threatening international peace as well. The second one that we have is the OFAC, which is the Office of Foreign Asset Control under the US Treasury. This is one that generates the most enforcement action globally. Why? Because OFAC has an extraterritorial reach, okay, that you will find it also in the CAMS questions as well, and in the chapters as well, the one which is related to the law. So any transaction that touches US dollars or involves a US person anywhere in the world falls under OFAC jurisdiction. A non-US bank, processing a USD payment through a US correspondent bank is within OFAC's reach. Okay. The next one is the EU consolidated list. It actually applies across all EU jurisdictions, and particularly post-Brexit, the UK maintains its own list through OFSI. The OFSI is actually Office of Financial Sanctions Implementation. The fourth is the national regulators. Every jurisdiction maintain its own national sanctions list in addition to the international ones which we discussed above. Institutions, they must screen against all these applicable lists, not just the UN or OFAC. And missing any of those lists, actually it's a significant breach. So now let's look at the next thing is the sanctions evasion. Now let's look at what is sanctions evasion. So sanctions evasion is the deliberate act of circumventing or avoiding sanctions restrictions using deception, intermediaries, or structure methods, using deception, intermediaries, or structure methods to access those funds, goods, or services that are otherwise prohibited. The word deliberate is important here. So in a way, accidentally processing a transaction for a sanctioned party is a compliance failure. Deliberately engineering a structure to hide that connection is sanctions evasion, a separate and more serious legal category. There are 6 main evasion techniques, and we'll go through one by one, and these all appear in CAMS exam. So let's look at the first one. Front companies and shell entities. So a sanctioned entity creates or uses a company that has no apparent connection to it on a paper. Nominee directors registered in a permissive offshore jurisdictions. The front company then transact with financial institution on behalf of the sanctioned entity. The second is third-party intermediaries. A non-sanctioned broker or trader in a permissive jurisdiction acts as a middleman. The sanctioned party never appear in the transaction. So the intermediary creates legitimate looking documentation and the transaction look clean. The dual use electronic scenario as described in the previous slide at the start, that is the same technique here. So the third thing is trade-based evasion. So goods subject to sanctions are misdescribed on trade documents, listed as non-controlled items, which means goods that are not on any export control or sanctions list, or ordinary commercial products that anyone can buy and sell freely without a license or permission. So these goods then are routed through third countries to disguise actually an origin of the destinations. Over and under invoicing also happen, which actually obscure the value, which and this particular topic will go into further detail and understand how each thing actually work when we will reach to trade-based money laundering topic. The fourth thing is the correspondent banking access. So sanctioned entities access USD clearing through respondent banks in jurisdictions with weaker AML controls. The correspondent bank processes the transactions without visibility of the ultimate party. The next is the flag of convenience and dark shipping. So vessels change their name, and switch off their automatic identification system, AIS, which is a transponder actually. So the tracking signals to conceal the cargo origin and destination. It's difficult then. This is heavily used in Iranian and unfortunately North Korean oil sanctions evasion as well. So the sixth thing that we have is the cryptocurrency and alternative channels. So crypto assets move value outside the traditional financial system, which actually bypass the screening. So privacy coins and mixing services add additional layer of concealment. Let's look at now the red flags in these sanctions related transactions. So 3 obligations: screen, investigate, report. Each has a specific requirement that the exam tests you on. So the screening, all the customers, their beneficial owners, counterparties, and vessels against all applicable lists, which we discussed earlier: UN, OFAC, SDN, EU, OFSI, and your own national list, which your country provided, not just one. All of them. The screening must be actually real time for each transactions. When you are processing a payment, at that time it should happen as well. When list updates, which can happen without warning, so your screening, you must rescreen actually immediately. The mechanics of how a screening system works, name matching, false positive management, and system tuning, we'll cover in a dedicated video later in this series. The next thing is the investigate. On any potential match, whether true match or false positive, you investigate and document. For true matches, freeze the transaction immediately. Do not process it. Do not return the funds without authorization from the competent authorities. For false positive, document who reviewed the alert, what evidence was considered, and why the decision was made too clear to it. That documentation is your regulatory evidence, and that will actually support you as an evidence ultimately when they are coming to audit you. And here is the main thing, that you tipping off the point. So you do not ask the customer directly whether they are connected to a sanctioned entity. Asking can itself constitute tipping off. The third item is the report. So a true sanctions match must be reported to your national regulator. OFSI in the UK, OFAC is in the US, the relevant national authority in jurisdictions. Timelines vary. Know your local requirements. Continue to hold the funds. Do not release without explicit authorization. And if money laundering is also suspected, file a STR, which must be separate. The two reporting obligations are independent. On the exam, you need to remember that screening all the list is extremely important. So if there's a true match, remember that, freeze and report. If it's a false positive, document in full and never ask the customer, which will ultimately give them a tip off. Now let's look at one question as an example in the next slide. So here's the question that I prepared just for some basic understanding here. Let's look at it. And I will point out a couple of things here. So look at this. A compliance officer at a European bank receives a payment instructions for USD 2 million. The instructions is from a Turkish trading company. So the first thing is this one. Okay, so you know that it's under sanctions. So that is one trigger or a keyword for you. With no prior relationship with the bank, the funds destined for a newly registered company in the UAE. Again, this word newly again here, and registered company, that's also one of the trigger. So sanctions screening shows no direct name match. The goods described as a dual use electronics. This is another keyword here for you. And then actually the question is asking, what should the compliance officer do first? Take a moment, pause this video, and then think of the answers. I'll post it here now. What could be your things? There are 5 options. I'll read it out here, and then you understand what could be the choice that you have to select, and you answer it before you unpause that. So first thing is the option A, process the payment. Screening shows no direct match, so there is no sanction breach. Option number 2, freeze the payment and report immediately to OFAC as a confirmed sanction breach. Option C, conduct enhanced due diligence on the transaction. The combination of red flags warrants investigation before processing or rejecting. Option 4th or option D is the return the funds to the originator and close the account. 5th option, ask the customer directly whether they are connected to a sanctioned entity. I'll reveal the answers now for you to take a look, and then we'll discuss this in the next. So the right answer is the conduct enhanced due diligence on the transactions. The combination of red flags warrants investigation before processing or rejecting. I'll explain further in the next slide now. So here's the question that I prepared just for some basic understanding here. Let's look at it, and I will point out a couple of things here. So look at this. A compliance officer at a European bank receives a payment instructions for USD 2 million. The instructions is from a Turkish trading company. So the first thing is this one. Okay, so you know that it's under sanctions. So that is one trigger or a keyword for you. With no prior relationship with the bank, the funds destined for a newly registered company in the UAE. Again, this word newly again here, and registered company, that's also one of the trigger. So sanctions screening shows no direct name match. The goods described as a dual use electronics. This is another keyword here for you. And then actually the question is asking, what should the compliance officer do first? Take a moment, pause this video, and then think of the answers. I'll post it here now. What could be your things? There are 5 options. I'll read it out here, and then you understand what could be the choice that you have to select, and you answer it before you unpause that. So first thing is the option A, process the payment. Screening shows no direct match, so there is no sanction breach. Option number 2, freeze the payment and report immediately to OFAC as a confirmed sanction breach. Option C, conduct enhanced due diligence on the transaction. The combination of red flags warrants investigation before processing or rejecting. Option 4th or option D is the return the funds to the originator and close the account. 5th option, ask the customer directly whether they are connected to a sanctioned entity. I'll reveal the answers now for you to take a look, and then we'll discuss this in the next. So the right answer is the conduct enhanced due diligence on the transactions. The combination of red flags warrants investigation before processing or rejecting. I'll explain further in the next slide now. So as we said, the correct answer is C. Okay, it's an enhanced due diligence before any decision to process or reject. So here's why. The scenario contains a classic sanctions evasion pattern. There's no prior relationship with Turkish intermediary, newly registered company, dual use goods, no direct name match, but that is exactly the point. Sanctions evasion is, specifically designed to avoid name matches. You play with words, one single character here and there. The red flags are not about the name, they are about the patterns also. So enhanced due diligence means like investigating the beneficial ownership of both the Turkish trading company and the UAE entity, understanding the end user of the goods, verify the commercial rationale for the transactions, checking whether either entity has any connection to sanctioned parties or jurisdiction throughout network analysis. Only after that investigation can the compliance officer make an informed decision. So why other options are wrong? Option 1 was a main trap. No direct name match does not mean no sanctions risk. This is the thinking that sanctions evaders rely on, and this is what you need to be careful in your exams. You need to pick the right keywords as well. So processing without investigation on the transactions with this many red flags is a compliance failure. Option B is premature. You cannot report as a confirmed breach without investigations. Filing a false report wastes regulatory resources, even of course resources within the organizations as well. Option D, which is returning the funds and closing accounts without investigations or reporting, is not the correct process. It also risks alerting the customer that something is wrong. Option E, fifth option, asking the customer directly whether they are connected to a sanctioned entity, risking actually tipping them off. In most jurisdictions, that in itself is a potential criminal offense. So for you to remember in the exam one more time, no name match does not mean as in like no sanctions risk. Assess red flags holistically, investigate before processing or reporting. Let's look into the next slide for more details. So 4 things to take away from this video. First, sanctions evasion is deliberate. Evaders use front companies, intermediaries, trade misdescriptions, and dark shipping specifically to defeat screening. A clean result does not mean a clean transaction. Second, true match versus false positive. True match freezes, actually true when there's a true match, it means freeze immediately and report it. When there's a false positive, it means you have to investigate, document your rationale, and clear with evidence on file. Both require action. Neither can simply be dismissed. The third thing is correspondent banking exposure. Providing USD clearing to respondent banks with the weak AML controls is itself a sanctions evasion risk. Know your respondent, not just your direct customer. The fourth thing is the red flag works. So actually red flag, work in combination. No single indicators, prove evasions. The combination of a new counterparty, a transit jurisdiction, dual use good, and complex payment routing is the signal. So document your holistic assessment, not just the screening result. This is the exam rule for that you have to remember, and that is what experienced compliance professionals do in practice on their jobs. Let's further see more details when we reach to the CGSS topics, which again definitely takes some time for now. I'm trying my level best first to cover the CAMS topics as much as I can, and then we'll move to the CGSS topic in itself. So as always, if you want to practice what you have just learned, or even from our previous videos, Advice Cube Consulting, we cover more than 1,000 or roughly around 1,500 questions to be precise, which consist all those CAMS scenario based questions in all 4 domains. And then we have prepared also concise study notes, considering all these working professionals are fully occupied in their routines. So the notes are crisp and to the point, so that you don't need to read the full 500 pages study guide. You need to really read the specific topics with the clear information in a shortest possible way, without digesting any of the important things. On top of it, then we have prepared also a course which is an e-learning course, and it has a bot particularly trained on the CAMS material. And anytime if you have a questions, let's say even sanctions, or even you have the correspondent bank, whatever the question you have, it will give you the specific answer related to your queries. Right, so we are done for this video, and then in the next video I am planning to discuss bribery and corruption, which is sometimes you call it ABC, anti-bribery and corruption, which covers like how corrupt officials use their financial systems to move and conceal corrupt proceeds, the connections to PAPs, to the source of wealth, and some of the most significant enforcement cases in the recent financial crime history. If you have gone through this video, and if you like the video, please hit like or subscribe so that you will know what's coming up in the next sessions. And don't forget to visit our website should you wish to practice those questions or purchase the notes or questions. You can reach out to us on the provided WhatsApp number, which you can see in the bottom or the footer of this slide, or you can email us, or you can reach to our website www.advicecubeconsulting.com. Thank you so much for your time. I'll see you in the next video.